Hi everybody, this is Osprey Eye from MyChartCoach.com, and in this video we're going to take a look at some of the ETFs and ETNs here. We're going to look at the bull and bear in ETFs, and so yeah, I want to take a look at these again. Not sure if many people are trading them, but they're great trading vehicles, and you can trade options. So yeah, they're really nice trading vehicles. If you look here at LABU, this is the biotech bull 3 times. It formed, okay, so it had formed 5 red candles in a row, and then today you can see here this doji formed, and so what this formed was bullish Harami cross reversal pattern. Okay, this is a very strong reversal pattern. Many times this pattern does follow through. We'll have to see, but this is signaling a possible bounce, and so yeah, what needs to happen is it has to get above the green line. That's the 50-day simple moving average at 94.97. So if it gets above that level, that's going to be a signal of that level, and then EMA 4 at 95.73. If it gets above both those levels, that's going to signal that it's heating up, and then once it gets back above the middle Bollinger Band at 97.36, that's when it can get a new uptrend going. Okay, so it's in the middle of it's back in this channel, it's in the middle of it, you know, and if it could break above 102, that's when it could retest the highs. Now to the downside, if it fails to hold support here at 92, you know, you could see a drop all the way down here. You've got 86 is the low close, and then you have the 100-day simple moving average at 84. So that is the downside risk. It needs to reverse here and break EMA 4 resistance. Now the inverse of LABU is LABD. This is the biotech bear 3 times, and so this chart has really been heating up. It had the 5 white candles in a row, and so it had a nice bounce off the bottom. As you can see here, it's been in a very long downtrend. It's been trying to turn this middle Bollinger Band into support. It got above the dotted purple line here. That's also the 20-day simple moving average, and then it pulled back below. It got back above, failed to hold, and so now it's back above that middle Bollinger Band. Today, a red candle did form and bearish Harami cross reversal pattern, and so you know this is another strong reversal pattern. It's set up now to possibly take a breather. We'll see. In my opinion, it's all about this middle Bollinger Band currently at 315, and so if it stays above 315, it remains in play. If it drops below 315, the downside risk is it repeats what it's done each time it's gotten above the middle Bollinger Band and pulls back below and retests the lows. So yeah, in order to reverse this downtrend, it needs to stay above the middle Bollinger Band. If that level does hold and it stays above 315, then the 50-day simple moving average is the next target. Now, if it closes above the 50-day simple moving average at 341, that would be super bullish, and that would be a signal that LABD is breaking out and that the biotechs are under major pressure. And so, you know, because tomorrow is the FOMC meeting, and so I'm showing you both ETFs, so that way you can play either direction depending on which way the market breaks out. Okay, so it's either the market's either going to likely break out tomorrow or break down. Okay, so it's going to, you know, one of the two are likely to happen. That's the way it's setting up on all the charts, and so the charts are coming to a flex point. If you look here at FAS, this is the financial bull 3 times, and so you know it's been you know setting up here in this channel, and yeah, it's coming to a flex point. You can see here, here's the descending resistance, and then you've got the ascending support, and so you have a symmetrical triangle pattern, and so one of the two levels are going to break. It's either going to bust through the red resistance line, and that's going to signal a breakout higher, and then it could run up to the 80s, or it's going to drop below the green line, and that's going to signal downside risk, and it could come down here and test the 200-day simple moving average. That's the two levels. Right now, it's at what we call the 50-yard line. It's the middle Bollinger Band, so it's the middle of the playing field, and so it could literally go either way. It closed right at that 50, you know, right at that 50-yard line, at the 20-day simple moving average at the middle Bollinger Band. Okay, it's the middle of the chart here, of the channel, and so if it holds the middle Bollinger Band here and gets above the 50-day simple moving average, it could run back up here to the 75 and test the top of the descending resistance. Or if you know the market reacts negatively tomorrow and the banks are under pressure, you could see this descending resistance line tested. If it drops below the 100-day simple moving average at 68, that would be a major red flag. Basically, if it drops below 71.50, that's going to be a signal that it's breaking down. And then if you, as you can see here, that the gold line has been trying to hold, it'd be major red flag if that turned into resistance. Okay, check out FAZ here. This is the financial bear 3 times. And so it's been trying to heat up. It's currently in a downtrend. The candles are below the middle Bollinger Band. It needs to get above these 2 levels, above the middle Bollinger Band at 1049 and above the 50-day simple moving average at 1067, similar to how it did over here. It failed to turn those levels into support and it pulled back. So if the financials are under pressure tomorrow, FAS could break out above these levels and make a run. Last time it made a run, it ran all the way up to the 100-day simple moving average at 1162. Okay, over here. So if the market reacts positively, then FAS is likely to run. If the markets react negatively tomorrow, then FAS is likely to run. Okay, and so here's EDC. This is the emerging markets bull 3 times. Okay, so this is your long emerging markets. Okay, and so this has the same. Check out the same symmetrical triangle pattern. All right, so you have the descending resistance and ascending support, and notice how it closed right on the 50-yard line. I call it the 50-yard line. It's the middle Bollinger Band, the middle of the playing field, and so it could literally go either way. All right, so today was a good day to end the day with some dry powder, and so that way tomorrow you have the cash to be able to jump in depending on which direction, and that's if you're a trader, and that's what we do is we're short-term traders, and so to the upside it needs to break this 50-day simple moving average at 139.84, and then the descending resistance line. If it can get above both levels, that'll signal it wants to break out higher. Now if it drops below the middle Bollinger Band, that'll be your quick clue. Okay, this is not working out. It's right at that level, 135.39. So if you see a drop below 135, that's going to be a red flag tomorrow. And then it needs to hold the ascending support line. It's been holding here, and so it bounced off of that on yesterday. And so if it drops below, then you're looking at the 100-day simple moving average at 128. If that level breaks, then you're talking about the 200-day simple moving average that was tested on that February drop. That's the thing here is everybody's talking about, there's a whole camp that wants to retest the lows, and there's another camp that wants to break out and retest the highs. And so, it could go literally either way. It's either going to drop to 114 or possibly run up to the 160s, or it could keep going sideways, right? That's the third option is the market just go sideways. We'll have to see what happens. Just keep following the charts. The symmetrical triangle patterns are signaling that the current trend is coming to an end and that a new trend's about to begin. And so we just don't know if that's going to be to the upside or the downside. And so if you look at EDZ here, this is emerging market bear 3 times. You could see here it's trying to heat up. It has the descending resistance, ascending support, and then it's coming up to this middle Bollinger Band once again. And notice it's below the middle Bollinger Band. It's below the 50-day simple moving average. Right now, EDC has the better chart. So if this breaks above both levels, if the markets are under pressure and emerging markets are under pressure as well tomorrow, then EDZ could heat up. If you see it trading above 770, that's going to be your big clue. Okay, yeah, it's back in play, and then it could get moving. You never know. The last time it got a run, it had a nice run, was over here in February, and it ran all the way up to the 100-day simple moving average at 874. To the downside, if it fails to get above that middle Bollinger Band and emerging markets are running, then you're looking at this 720 level, and then you're looking at possibly a drop down to 670, that low from down there in January. Okay, let's take a look at Brazil. All right, let's look at BZQ here. Okay, so check this out. This is the ultra short Brazil. Okay, so it's been heating up. It has a really bullish chart right now. Okay, so it's been on a major run. It's been up for 6 days in a row, and so the question is, how many days in a row can it keep running? It had a 7-day drop over here. It had another big multi-day drop over here where it was 8 days in a row. So this does have a history of being able to form these multi-day runs in a row. And so basically, in my opinion, what you need to focus on for BZQ is the green line here. That's the 50-day simple moving average. There's been 2 closes in a row above that level at 721. If it holds an EMA EMA4, that's 724, that's the pink line. Notice how all these candles are above that level. If those two levels hold, that's a signal to keep riding. You know, it could come up here and test the high close resistance levels, and you know, if it gets above this 810 zone, it could run up and test that 100-day simple moving average at 847. That's the eventual target if the 50-day simple moving average holds. Now, if you see it drop below 721, if you see it hitting 720 and below, that'll be a signal it's not ready to go, and then you could see a drop down to that middle Bollinger Band at 689. Now, if you look at EWZ here, this is the Brazil capped ETF. This is long Brazil. Notice how this is the bull Brazil ETF, and notice how it has been on a major drop here. It's down 6 days in a row. It looked like it was trying to get a bounce going on Friday with that doji. You know, it had the doji going many times during, you know, that signals a possible bounce, but that did not happen. It dropped lower, and so basically what I like to do when stocks or ETFs or commodities or cryptocurrencies or whatever you have on a chart, if you're looking at the chart and the daily chart here, if it's riding EMA4 resistance lower, just stay on the sidelines until it breaks above. That's the safest thing to do. Once it gets above EMA4 at 44.39, that's going to be your clue it's heating up. Okay, this is the example. If you look over here, it got below EMA4 on this candle. It dropped down. It got above right here and then failed to hold. And you know, it has to stay above. And then once it finally got above the EMA4 on the 12th, it started riding support higher. So basically, it's safest to wait for that break above instead of trying to catch the falling knife when you have multiple days in a row that are down. You know, people that tried to catch on this day, you know, now they're underwater. But the bottom line is it has multiple red candles in a row and it's setting up for a bounce. I would use the 15-minute chart to time the bounce. It needs to get above the middle Bollinger Band and the 50-day simple moving average. If you look at BRZU here, this is another bull 3 times, and it's down 6 days in a row as well. If this continues, it looks like the obvious target is down here at the 100-day simple moving average at 46. Now, that's where it bounced off of in February and had a nice run. So, you know, that could be the target for the market makers. We'll see. It's hitting, you know, a key support area right now. You could see that was support from over here in February, and so on the 5th, and so, you know, it's hitting that zone right now. It could get a bounce. If that breaks, it's going to go down to this 46 to what is that, like 44? It looks like down here. Yeah, down here to 44. Now, once again, it would be safest to wait for it to break above that 50 level and get above EMA4 at 50.37 before you try to catch the falling knife. It does look like multiple red candles in a row, so it could have formed a bullish 3 gap downs reversal pattern. Okay, let's look at UWT here. This is up 6% today. It's above 50 on RSI. The nice move today is the close back above the 50-day simple moving average. So this was a big gap up open for oil. This is sorry about that. This is long crude 3 times. So this is an oil ETF or ETN, and it had a really nice gap up open today, so that was a strong move. There is a gap between high of day yesterday and low of day today. The main thing on this chart is to turn this green line into support. If it can stay above 27.69, it could push higher. The next key level to break is the high close resistance level from the 26th of February. If it can get above this 29.50 zone, then it could possibly push back up into the 30s. So keep an eye on UWT for a break above 29.50. If it fails to break that level, that could be a temporary top. It has to stay above the 50-day simple moving average now that it's above. If it doesn't, then it could drop down to test that middle Bollinger Band. Okay, let's look at one last one at DWT. So this is the 3 times inverse crude oil ETN, and so this is you know, bearish oil. And so if oil is dropping, this is going up, and if oil is going up, this is going down. And so basically, this is, you know, very oversold levels. Okay, so now you have Fasto back down here at 10. You have a giant gap down. It's hitting the support level from the 26th of February. If that breaks, then you've got the big support from January and the start of February down here between 1050 and 1025. Yeah, it's hitting the lower Bollinger Band right now. It broke down. You know, it needs to bounce off of this support zone down here, this 1030 support zone. If it fails to, you know, that would signal major downside risk. It needs to get back above this EMA4 at 1159 to get the reversal going. It could try to get a bounce off of this key support zone that it's hitting right now. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis and how to trade ETFs and ETNs using charts and technical, using the charts, come check out our chat. I'll post the link below the YouTube video. Okay, thank you.